Welcome to Simple Investing Secrets. In today's video, we'll talk about the recent failure of two sizable US banks that occurred just 48 hours apart. So before we start, please like this video and subscribe to our channel so you can get news and tips about investing every week. Let's get started. It's a rough week for the American financial system. In just 48 hours, the banking sector has been shaken by the collapse of two major banks. This week has seen major trouble for financial institutions tied to innovative and forward-looking sectors of the economy. Silvergate Capital, a holding company for a bank that since 2016 had bet big on servicing the emerging crypto economy, announced March 9, 2023 that it will wind down bank operations. Silicon Valley Bank, which has long played a similar role managing money for venture capital-funded startups, was shut down by state regulators on March 10, 2023. Most worrying is that these banks serve two so-called growth economic sectors, the tech sector and the cryptocurrency industry. Silicon Financial Group, stock ticker SVB, the lender to Silicon Valley startups, failed on March 10, 2023, falling into the hands of the FDIC. The federal agency has taken control of the banking company, reviving the ghosts of the 2008 financial crisis. Silicon Valley Bank, located in Santa Clara, California, was closed by the California Department of Financial Protection and Innovation, which appointed the Federal Deposit Insurance Corporation as receiver, the federal agency said in a news release. All insured depositors will have full access to their insured deposits no later than Monday, March 13, 2023. The FDIC will pay uninsured depositors an advance dividend within the next week. People who didn't get insurance on their deposits will get a receivership certificate for the rest of their money that wasn't insured. It added that it may pay a dividend to uninsured depositors as it sells the assets of SV. Silicon Valley Bank was the to-go bank for tech startups. At the end of last year, SVB had $209 billion in total assets and $175 billion in total deposits. SVB becomes the second biggest failure of a U.S. bank after Washington Mutual in 2008. SVB was a central player in the innovation economy. It was the backbone of the tech industry in Silicon Valley. It was an important part of the startup ecosystem because it offered specialized financial services, knowledge of the industry, a valuable network, and a good name. It also offered a range of financial services like venture debt, corporate banking, and asset management that were made to meet the needs of new businesses. These services are meant to help new businesses keep track of their money, improve their cash flow, and grow. When interest rates went up because of the Federal Reserve, it hurt the value of SVB's investments, especially its bonds. As a result, the bank had to resort to a capital raise as many startups withdrew their deposits from the bank since they were burning a lot of cash. To pay for these withdrawals, SVB had to sell bonds, mostly from the US Treasury, at a discount. The rise in interest rates has made existing bonds less valuable. In selling these bond positions, SVB had to take a significant loss. But its attempt to raise $2.25 billion failed. Sources told CNBC's David Faber earlier that deposit outflows were outpacing the sale process, making it very difficult for a realistic assessment of the bank by potential buyers to take place. Despite initial panic on Wall Street over the run on SVB, which caused its shares to crater, analysts said the bank's collapse is unlikely to set off the kind of domino effect that gripped the banking industry during the financial crisis. But smaller banks that are disproportionately tied to cash-strapped industries like tech and crypto may be in for a rough ride, according to Ed Moya, senior market analyst at Owanda. Everyone on Wall Street understood that the Fed's rate hiking campaign would eventually break something, and small banks are currently suffering as a result, according to Moya. Crypto bank Silvergate also collapsed. Silvergate, the crypto bank, also collapsed 2 days earlier than Silicon Valley Bank. The bank was where most of the big crypto firms went because traditional banks did not want to do business with them. And they were hesitant because regulators had warned them that the crypto industry was a risky one. On March 8, 2023, the company said that it planned to wind down operations and voluntarily liquidate the bank in an orderly way and in accordance with applicable regulatory processes. It added, "In light of recent industry and regulatory developments, Silvergate believes that an orderly wind down of bank operations and a voluntary liquidation of the bank is the best path forward." The bank's wind down and liquidation plan includes full repayment of all deposits. The company is also considering how best to resolve claims and preserve the residual value of its assets, including its proprietary technology and tax assets. This could be a bigger fall than 2008. Pressure from regulators, especially the Department of Justice, led to the failure of the bank. The Department of Justice has started an investigation into the bank's business dealings with the empire of the former crypto king, Sam Bankman-Fried. Bankman-Fried has been charged with 12 counts of fraud stemming from the collapse of his crypto empire, the cryptocurrency exchange FTX, and its sister company, Alameda Research. Silvergate was established in 1988. At first, the bank focused on lending to businesses, but it also gave loans for both residential and commercial real estate at the time. But in 2013, the bank began to court crypto firms when traditional banks were reluctant to do so due to the opacity prevailing in the sector. Silvergate thus became the crypto bank. In 2019, the company went public for the first time, promising to completely refocus on the industry, which was going through a renaissance at the time. As of September 30, 2022, Silvergate had $11.9 billion in digital assets held as deposits. But the bankruptcy of FTX and Alameda on November 11 scared away customers. So as of December 31, 2022, the bank only had $3.8 billion in digital assets on deposit. FTX was one of Silvergate's big customers. The question now is whether other US banks will fall. Could the problems at SVB and Silvergate spread to other regional banks? Customers may rush to these banks to get their money out of fear. The US banking system is on the verge of a much bigger collapse than 2008, said economist Peter Schiff, known for his dire predictions. Banks own long-term paper at extremely low interest rates. They can't compete with short-term treasuries. Mass withdrawals from depositors seeking higher yields will result in a wave of bank failures. These two high-profile bank closings are causing havoc in the cryptocurrency market, with leading tokens Bitcoin and Ether down almost 10% for the week each as concern grows of a liquidity shortage for the industry. Niche lenders like Silvergate and SVB, which targeted specific customers in the crypto and tech worlds, are more likely to be affected by industry shakeouts, says Hani Rashwan, co-founder and CEO of crypto investment firm 21 Shares. When that underlying industry suffers, there are obviously going to be exaggerated blowback. As always, it is essential to do your due diligence before committing your hard-earned cash to buy stocks or invest in the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.